When we think about the indicator lines, it's real obvious to think about direction that the lines go. But oftentimes we forget about the location of the lines, where they are in relation to other lines, and more importantly, what it tells us about the price movement based on indicator location. I have a few examples here in the charts that I'm going to show you, and they're basically low cycles. I'm going to begin, well, first of all, there are many different things that I'm going to explain in this video that will help you in seeing how price is going to move. And this, on the green vertical line day over here, we have a classic example of a trend red down and a power red up. If you haven't heard me say anything about the big three before, Swing Zion is the third of the big three, along with trend red and power red. And when those three do something together, the three have powers together that cause, I'll just say, stronger reactions typically. Like, for example, if all three of them are in a BOC pattern, or, something along those lines is what I'm trying to say. In this particular case, on the green vertical line, the power red is acting as a leading indicator telling us that the price is going to go up. And of course, Swing Zion at this point is just running flat really low. And I'll emphasize that by saying in the price chart we have price green down at 0. Price green right now is at 0.48. And obviously we can see at this point that it's going down. But the thing that first of all, I want to point out is I want us to always look at the 7 short-term trend lines. And those are in 3 groups. They're the trend trio right here on the trend chart. And that's the yellow, pink, and blue lines. They're a little wider than the other lines. They're obviously easily recognized because they all move together. They all cross 0 on the same day. And they give us information, like for example, I'll just compare them right now. Look at the pink vertical line, and you can see that yellow, pink, and blue are under 0, but the spread, the difference between the lines, is very small compared with the spread over here on the green vertical line. And on the pink vertical line, over the next, looks like 5 or 6 days, we have a nice uptrend. Several dollars in value go up. On the pink vertical line day, the close was at 1993, and here on the peak, the close was at 2209. So it went up a couple dollars in that short period of time. Now, how can we learn to recognize the difference between one movement? Because keep in mind, the pink line is trend red down and power red up. We've got the exact same conditions here in these 2 indicators. Yet one is flat, hardly moves at all the next day, and the other one goes up. And normally when trend red is lowest, it goes up farther. And so this is an opposite situation from the perspective that the price value increase is opposite of what it normally might be. And now let me emphasize those 3 short-term trend groups. The trend trio, yellow, pink, blue, the power orange and green lines, and over in the swing chart, the red and green lines. And the difference that I might say here that I want you to note, in the vertical green line, power green has crossed under zero. It's heading down. If you go over here to the swing chart, the red and green lines, again, the swing green has crossed down under zero. This is a very significant point because if you've heard me talk about the short-term trend lines, when they are going up and they are under zero, they're not as strong as when they're going up and above zero. You seem to have better price value movement when they're going up and above zero. Likewise, in this example, when they are down and above zero, the downtrend may not be as strong, but when they cross under zero, it typically gets stronger. Now, that may seem like a backward comment, but it's all relative to the 22 market force recognition indicators. Or maybe I should say the fast lines of those 22 market force recognition indicators, like the trend red and the trend green, and your power red and power pink and blue. Likewise, your zip pink is really fast, and of course every line in your zip chart is a very fast line. We think when we see this situation of green crossing under zero, when it's just done that, because those lines to change directions, it would literally have to be a gap in order for them to change directions, because they change slowly, typically. And so from that perspective, we need to identify different aspects of location. For example, in this same situation that we have here between the green vertical line and the pink vertical line, I want you to note one thing here. The power lines are both under the green and orange lines, but in the pink vertical line they are close together. I might equate it to like being a rope. They've got more power when they're close together. They're real scattered on the vertical green line, and that typically is indicative of a continuation of either a flat or reducing price. That is a piece of supporting evidence, but it's not really the key. One of the keys between the two is is a very important line, and it's power yellow. And power yellow is part of the big four, or the power four. The pink, blue, white, and yellow make up the power four. The power three do not have the yellow, and that's because it runs independently. We know that from examples with yellow twins, where zip yellow and power yellow are lowest and rising together. That's an uptrend. When they're both lowest and rising together. When they're both highest and falling, you're in a downtrend. The yellow twins. And so power yellow is an independently, or what do I want to say? I look at it as being a very independent individual, but it's really an indicator line. However, think of it in those terms, because oftentimes in movements you'll find power yellow underneath the power orange line. And remember, we identified divergence in the power 3, 4, 5, and 6 lines in relation to where power orange is. We typically, when the power lines cross over zero, when they cross up over zero, you're going into an uptrend. When they cross under zero, you're going into a downtrend. There will be a typical directional values when they cross over the orange and the green lines as well. But sometimes they cross separately, and most of the time they'll cross together. Like when, for example, power red crosses zero, it usually crosses the power orange and green line as well. But power red, remember, moves very quickly. It is almost always at the bottom or almost always at the top of our, when we watch the stocks. And it's designed that way. And so that is also a reason why we exclude it when we're considering lowest and highest values. When yellow is lowest but red is under it, we exclude power red. And so the thing that I was pointing out here is that in the vertical green line, yellow is going down, and in the pink vertical line, yellow is moving up. Obviously, on those vertical line days, we cannot see that, but there is a distinction that I want to make. If I go out here 2 days after the pink line, or the power yellow line is minus 1.3. If I go out a third day, it is minus 0.8. It's obviously getting closer to zero, but we're still negative. If I go out 2 days past the green vertical line, power yellow is at 2.96. What I'm alluding to here is location. Power yellow at 1.3 has more ability to climb faster than power yellow at minus 3. On the third day, after the green vertical line, power yellow is minus 3.03. I forgot to say minus in each of those cases, but I think you understood that. Now, so what this video is partly about is that you would think of indicators not only directionally, but from the perspective of their location. Because as they get closer to zero, they have the ability to move. I'll kind of say that, excuse me, they have the ability to move faster, or they have the ability to change direction. Excuse me again. They have the ability to change direction more easily. And this is especially true with the power, or with the proximity group lines in the power chart. The proximity 5 is the power 4 with power Zion with it. The proximity 6 adds the power red line, because sometimes you'll see gaps with all 6 above the orange line or all 6 under the orange line. You'll see the power 3 above with power yellow under orange. There's all kinds of location combinations in the proximity group lines. And there's locational divergence when Zion is under orange and the power 3 or the power 4 is above orange. There's also directional divergence when power Zion is down and the power 4 are up. And when you have both directional divergence and location divergence between power Zion and the power 3, or if then you have significant ability to, that's a condition of a gap. And we just eliminate, when we When yellow is under zero, Zion is under zero, and the power 3 is above zero, we treat that as a power 3 relationship. So we just would look at the power 3 and what they're doing and analyze the situation with them, with power Zion, in the comparison of the power 3. Remember, gaps can occur with power 3, power 4, or power 5, or power 6. They're just different situations. In the shapes of the lines, the power lines, when we look at gaps, we deal with proximity group, power line locations, and proximity group power shapes of the lines. And so you like a BOC pattern or a TOC pattern or a 2-day BOC pattern, which is down, down, up. Now, the element that there are obviously key elements. When I commented on the pink vertical line, how close the trend trio line separation was in relation to the line separation of the trio on the green vertical line. Also, I talked about how close the power lines were together. They're all under zero, whereas they were scattered on the green vertical line. One difference as well is that power Zion, on the pink vertical line, power orange and power green are above zero. And again, it's a location issue. When you heard me talk about lines being above or under zero, or above or under the power orange line in the power chart, then obviously we can identify with location as an element to allow prices to go up. After the power pink line, orange and green continue in a low angle down movement, but we have a nice uptrend after 5-6 days after the pink vertical line. Again, if you haven't heard me discuss this, one day after the pink vertical line, trend red crosses over trend green. One day after the green vertical line, trend red crosses over the trend green. That day is typically defined as the day that we consider the uptrend to start, because red is traveling over green and we are technically in an uptrend. But when you have a trend trio with wide spread between yellow, pink, and blue, when you have scattered lines, the power lines underneath the power orange line. I mean, keep in mind, on the green vertical line, power pink is in a -4, 4.1. What is power pink? Power pink is our short deep cycle indicator. Swing gray is our best deep cycle indicator. It tells us the cycles, where cycles are going, or where the trend is going. Remember, in the candle chart, the blue dashed line is the long-term trend line, and we built that in the way that we wanted it designed, that marks the long-term trend, and it's comparable to any long-term trend line that you've seen out there, but we basically built it with an exponential average line and modified it in some key ways. But even though you look at the long-term trend line, traders don't use the long-term trend line in their trading activity. We have the 7 short-term trend lines in the 3 groups that make up the short-term trend line. But the short-term trend lines don't identify pullbacks and rallies like trend red and green or zip red or swing pink or all the power lines. The way to identify pullbacks and rallies is by watching trend red and green and zip red and power red and swing pink and swing Zion. Remember, you have 5 price barometers in the charts. Swing pink, I said that wrong. Zip pink, swing Zion, and the 3 price lines. Those 5 lines move in the price direction every single time. They are tracking the price, and we want that. And we wanted it on not only in the price chart, but we wanted it in 2 other charts for quick identification. We can look at those and identify what the price is doing. We also added them for other reasons, to basically as a comparative analysis mechanism in multiple indicator lines. The distinction that you see in the indicators, I mean, they're powerful. We built, I'm guessing somewhere over 1,300 or 1,400 indicators. We knocked all of those, and they weren't all the market force recognition indicator types. So don't let me confuse you there. But we built hundreds and hundreds and hundreds of MFR indicators. We picked only 22 to keep, and for obvious reasons. And those 22 give us incredible information. They're very sensitive. They're very powerful. There's a dozen of them that are leading indicators or more. That's powerful information. And when we say the indicators or the indicator power is the heart of the system, believe me, that's very true. And you can take the formula with the patterns, the conditions, and the signals and, pick the patterns out of the pattern types up and the pattern types down. And you can verify the conditions, and you can identify the signals to get in the trade and eventually out of the trade. And that's a powerful formula. That's a powerful system. When I've said it on other videos, when I was trying to figure out a method or a procedure or a technique that I could be consistent in my trading back in 2007, I didn't know how I was going to get it, but that was one thing that I wanted to solve, was my inconsistency. I also wanted to be able to identify how things were moving next day or even farther out. And I didn't know how I was going to accomplish it, but I knew that if I had some great indicators, that I could then use those to build the things that I had. We eventually paired and synchronized, matched these lines together, and the results are what you see today. This, when you think of indicators, you need to think location as well as direction, because there is a significant relationship between how close the line is to zero and if the indicator line is above zero or under zero, and of course direction. And so it's a combination of things that we look at and we identify, and all of this becomes supporting evidence that we incorporate into a decision that we make to either buy, sell, or pass on an opportunity. And so now, one of the other key lines that I want you to look at right here is over in the zip chart. After the green vertical line, zip yellow stays low. The next day, zip yellow is at 9. Several days out, zip yellow is at 7. On this big green candle out at the end next to the right edge of the zip chart, that zip yellow is at 17. The following day, zip yellow is at 8. It didn't go over 20. That when it stays in that range under 15, prices are very flat or they go down. Obviously, if they would stay under 6 or 7 for several days in a row, you're going to be in a downtrend, and it can bounce a little up to in that 15-20 range, but you're still going to be in a downtrend. I mean, look at this 2-day on this green candle right out next to the right edge of the zip chart. It has a zip pink high, and we know that zip pink, when it's highest on a peak like this, it's very typically a next day down. We also have the typical red peak. Zip red is at 57 and zip yellow is at 17. And we know how fast zip red is, and it's kind of an inverse relationship. You know, zip red can move 40, 60, 80, 90 points in one day. It's the fastest line length indicator mover in the system that we have. Just jumps out and moves. Now, by thinking of zip red only getting up to 57, you know there's a lot of pressure pushing value down, simply because zip red could not get up to 70 or 80 or 90 points. And so think of those inverse relationships as well when you think about a downtrend. Over here, one day after the vertical green line in the zip chart, you have zip red at 44 and zip yellow at 9. It's an obvious red peak. And of course, next day it goes down. But in reality, red never even got above 50, and so that's another great identification piece of information that because it didn't climb over 50, that the downward pressure is still there. And that downward pressure has been going on for 5 or 6 days before you got to the green vertical line. And then you get one of these price green is under red situations. Actually, on this particular day, price green is still above red, but it appears to be going down. And when price green is going down, you typically get one of these long days going down. You get one of these long trends going down. But notice at the end of you can pick the bottom just by looking at the price green chart, price green line on the price chart, and see you've got a low angle down in the price green line, which tells you next day it's going to go up. It's powerful. It's powerful information. Look at the difference between the lines. On the pink vertical line, price green is at 31. Price red is at 22. On the green vertical line day, price green is at 0.48. It's just above 0. And price red is at 0.43. Again, it's just above 0. But it's under green at the moment. And so, again, big distinctions between these 2 days. When we look at the pink vertical line, we see that swing red and green are both above 0. It's a location issue. With red and green above 0, they don't have as much power to drive forces down. When they start going under 0, they do. And we can in this particular case, I'm not going to get into going past the window that we see. I just want you to know that the downtrend later on can continue. simply because of location. Price green and red are now both under zero at the right side of this chart. Same is true with orange and green on the power chart. And of course, your trend trio is faster than both the other two groups, the power orange and green and the swing red and green. And they're starting to climb up, but they're still under zero. And so the combination of these things is what tells us. It's just like right here on the, we have a green candle 1, 2, 3, 4, 5 days after the pink vertical line. We have trend red on a peak, and I want to point out that it is a bottlenose peak, and bottlenose peaks are very powerful on the peak. To tell us that bottlenose pattern is a reversal pattern. 3 days up in a bottlenose pattern is a reversal down. 3 days down in a bottlenose pattern is a reversal up. The middle line is always a low angle line, or should be. There are days when you have 3 days up and you basically have 3 straight lines in certain indicators, or maybe a crescent move, 3 getting taller each time. Those are matched with bottlenose patterns, and they run together. When we get a lot of 3-day ups with a few bottlenose patterns, that's all that we need. We normally like to see at least one bottlenose pattern in a 3-day up situation to get a reversal, because 3 days up can just as well be 4 days up. You don't have a signal to tell you it's going down. But in this green vertical line, on this day, 5 days after the pink vertical line, the power red is in a bottlenose up, trend red is in a bottlenose up. In this particular case, the trend trio has just crossed over zero. This is the first day of the crossover. And so, a lot of us have a tendency to think that, well, it needs to go 4 or 5 days past because blue and pink and yellow are still going up. But remember, the trio does not define the pullbacks and the rallies. They do not define. They occasionally will define the cycle tops and the cycle bottoms, but only with very strong movement. There's usually a delay. I mean, obviously here there's a 3-4 delay before the blue line starts going down, and of course we run 3 or 4 days with pretty flat prices too up here. But trend red is under trend green, which indicates a downtrend, and until it crosses above it, it's pretty much a downtrend. And that would carry you from this point right here, 5 days after the pink line. We've basically got a downtrend until the day after the green vertical line, when red crosses over and above, when trend red crosses over and above the green line. That basically ends the downtrend. And it pretty well does with the candles too. It's kind of amazing how it works. In the example here, if you look at this same line over here that I was talking about in the price chart, there are obvious signals of things going down. In the price chart, you have price green crossing over price red. The crossover is a divergent move. When red crosses under green and goes down, that's a divergent move. When green crosses over red and goes up, that's when it usually does that, because if you're not familiar with it, normally I'll probably say 70 or 80% of the cases, price green is highest when a downtrend starts. Red is more typically on top in short rallies. I have in some charts seen certain symbols have red highest for months at a time. And I'm not sure what caused that. But price green is typically highest when it goes down. And so when you get a crossover green on this day right here, you've got an excellent pattern for a next day down. You obviously, if you don't see it, let me do it this way, both price green and red are in bottlenose up patterns on the peak. And so the price lines, which are even more powerful than other indicator lines in defining price shapes, tell us that next day down after this peak, you're going to get a red candle. It's obvious also if you go to the zip chart. Zip green is at 100. It's been at 100 for a couple of days now. Zip pink has come out from underneath the red and gray lines, and zip pink right now is at 96.09. And that's usually the day of a downturn. When zip pink comes out from under the other lines, it's a twofold combination. Zip pink comes out from the other lines, but typically red, gray, yellow, and blue drop down. In this case here, red and gray drop down, but yellow and blue were still climbing up in the uptrend. And so it still makes no difference. They were lower than red and gray. So from the perspective of where the line ends up, on the day that this peak occurs, yellow and blue are under under zip red and gray, which is typically where they end up. Okay, so again, we're dealing with location. It's just like zip green being highest. That took the position of being highest, and with that condition, it then gives us the information to say it is possible for prices to go down next day. It could go up. That's possible. But we've got the price lines in a bottlenose pattern. We have the price green above the red. Those are two indications right on the price chart that tell us that. And also, price green is at what? 136. Red is at 133. Again, the top of the price lines are at 150. We very seldom see green or red go over 150. I don't think red hardly ever. Green will go up over 150, very seldom stays there. So when you get price lines in the 140s, you know that the downturn is coming soon. And it happens obviously in the 130s, it happens in the 120s, probably the 30s and the 40s most frequently. It'll occur down even into the 90s. Price green in the 90s can turn around, but not with regularity. Over 100 or over 110 can be easy. It just depends on the patterns that you're looking at. But what I started out, or what I'm continuing to indicate here, is that at this point, with the peak day, 5 days after the pink vertical line, the signal on the pink green top pattern, when zip green is at 100 and zip pink is under it and moving up, that is the definition of a pink green pattern. A pink green top. The same thing occurs at the bottom. Zip green runs along the bottom at 0, and zip pink comes in and travels next to it and continually goes down. And when it turns around, it can be 0.01. I've seen it very low. It often will occur under 0.5. Like 0.123 it has a good chance of going up when it's under 0.5. Now, also in this relationship, what that I haven't talked about is I want to mention the swing gray line. In the swing gray line, remember the swing gray is our deep cycle line, and it tells us a lot of information. On the pink vertical line, it is above zero and going down. It doesn't have as much power to drive the price down when it's above zero as it does when it's under zero, like on the green vertical line. Swing gray is under zero and heading down, and because we know that swing gray again is a slow moving line, it takes a lot of force to do a BOC pattern or a TOC pattern in swing gray. It typically is a real slow curve changing directions. One of the other things we have here as well is that in this movement from the pink line, or from the 5 days after the pink line, the next day the green is at zip green is at 100, but then everything is low. Red and gray are now at 50 or under 50, which is indicative of a downturn continuation for sure when zip green is at 100. I forgot to mention that when zip green is at zero with pink going down, that is a pink green bottom. And those are pink green tops and pink green bottoms are two patterns in the pattern types. Obviously one is up and one is down. Or price direction, of course. Now, this note here in this downtrend that you have leading up to the vertical green line, you had zip Zion highest, and we know when zip Zion is highest and going down, you're in a downtrend. So there's a classic example. A couple of days before the green vertical line, the zip red and yellow seem to have bumped into Zion. That's a classic case of, on this day right here, 2 days before the green vertical line, we can see that zip red is in a flat top. It's a low angle down. Zip red is at 37.04, and the day before it is at 38.89. So zip red is in a low angle down on this day, and that tells us that when you're on a peak and going down, especially when zip red is under 50, it couldn't even get up that higher. Now we know it's going to go down stronger. So by looking at the zip Zion line, we can tell we want to stay in that trade for another day. Then on the day before the green vertical line, zip Zion is again highest. We would stay in the trade, and then we're down here to the green vertical line. And of course, that may or may not dictate the end, which obviously it does not. And typically when you get these green lines that are running down next to zero, and especially when they go under zero, then they will obviously, there's usually an extension of the continuation of the downtrend before they go up. But it's real easy to see the turnaround. All you got to do is look at the zip green line as I showed you before. And again, location. In the pink vertical line, trend green, price green and red, and obviously blue, they are all in a low angle down pattern, which is a next day up situation. But and again, I'll emphasize this, in the pink vertical line, zip yellow is lowest and going up, and in the pink vertical line, power yellow is lowest and going up. If you look at the green vertical line in the power chart, you can see that power yellow is not lowest. It is scattered in amongst the other lines, and that tells us a significant amount of information. When indicators are highest or lowest, or when I make comments about certain indicators being highest or lowest, that's part of the supporting evidence that I'm trying to address, because those are key pieces of information giving us supporting evidence which indicates that the price is going to move in whatever we're talking about. So just some real basic information, but real powerful information. You can see the difference. I mean, these are what you look for. You look for trend red, low angle downs, and power red in a BOC pattern. I mean, that's divergence in itself right there, and you should get a decent uptrend, like you got on the pink vertical line, but not like you got on the green vertical line. Now, I want to go back and compare one more so that you get a better influence, because I want you to look at this uptrend. On this Zion line day, I'll move this other group of charts or the situation back. On this vertical line day, I'm just using this as an example because this would have been a logical step for you to say this is a good uptrend moment or signal for us. This one back here is obviously good as well, and there the price closed at $15.16, and the reason I say that is because you had gray lowest and it down touched zero. You also had the power red down touching the other lines. The other thing that I'll point out to you here, note all of the power lines after the Zion line where it is right now. All the power lines are running above the power orange and green lines, telling us that we're going into an uptrend, or we are in an uptrend. Power red has a much more bounce to it, but I mean up here power red is at 3.46, and down here power red is at 2.4. So whenever it's like 2.5 to 3.5, you're in a good steady, normally in a good steady uptrend. Okay, so you could have picked this symbol up several days because of this downtrend. Note down here on this vertical line day. Now this, keep in mind, this is moved. The line that I had was right here originally. And here Zip Zion does a flat bottom for us, so that's a low angle up, and it's in a magnified right leg higher pattern, about a 5-day right leg higher pattern. The same is true. I'm actually going to put up another vertical line right here to go back to that original point. But between the green line and the Zion line on the trend chart, you have a 5-day right leg higher pattern, and which is very indicative. Right legs higher are always indicative of a uptrend. And when you get a larger pattern, if you haven't had a chance to look at larger patterns, there's a line on the home page for that. But it tells it and the key thing over on the green vertical line day, what do we got? We actually have the power green crossing above zero, which is indicative again of stronger movements, upward movements. And so the best thing to do when you see that is to get into it, and you can trade it just based on the green vertical and orange line, on the green line and the orange line as they go up if you want. Again, obviously, if you don't get too many, if you don't get the yellow line turning down. Remember, the trend chart turns down or moves faster. It's going to be the first one to go down before the other two groups, the power group pair or the swing group pair. And so as long as your yellow line is staying above zero, you're fine. One other thing I'll point out to you here, I'm going to draw kind of a ellipse on this thing. And that is right here with the with the eclipse that I've got. There, I got it centered now. What do we have here? This is a classic for a strong next day movement, and obviously it can be more. But we have trend red down touching under 0. This is one of the 6 patterns that we use as the down touch. Remember, they can down touch the blue, pink, and yellow line. They can down touch the 0 line, and they can down touch the underneath the 0 line, and they can do a sky touch for gaps. And in this case, strong uptrends. And so this is the 5th of the 6 possible down touches that we find for gap capabilities, because you have to have those 3 patterns all doing what they need to do to make it work. You have to have 12 or more of the identical indicators. Excuse me. You have to have at least one down touch in the trend chart, one of those 6, and you need to have the appropriate proximity group patterns, both from a location perspective and from a shapes perspective. And so when you put all those together, then it qualifies for a gap. And what we like to see in addition to that is additional supporting information, like a ZIP Zion highest, or a red spike, or there's just a number of things that it could be. But getting back to this eclipse here, trend red is in a down touch under 0. Green is in a down touch pink, and that's a classic highly powerful down touch. Whenever red or green down touch the pink line, you have a reversal pattern. And then gray is down touching the blue line. And again, gray is highest. I like that when gray is highest. I also like it when gray is lowest. But in this case, gray is matching in with the down touch situation with red under 0. Keep in mind, trend red yesterday was at 32, and trend red today is at -1. And so it dropped 33 points. That's a powerful move for trend red, and that often happens when we have these types of movements. And likewise, I'll show you, I'll emphasize over here, this eclipse right here is 4 days after the Zion line. 4 days after the Zion line is 4 is right here where we have this blue spike bottom in the price chart. Now note, I'm going to create a green vertical line there for that situation, and I want you to look at zip red and zip yellow now. Zip red and yellow are both down. Zip red's at 67 and zip yellow is at 74. And that is a red spike. And you're gonna say, well, that doesn't follow the rules. Red has to be under 50 and yellow has to be above 50, and they both need to be going down to qualify for a red spike. Yes, that is the rule, and that's the general rule we like to follow. But once you understand the flexibility of red spikes and red peaks, you begin to see them more clearly. Because what this red spike is telling you is that zip red, and it's a fast mover. You'd think if trend red is dropping 30 points, zip red would be dropping 80 points. But what does zip red do? It went from yesterday, zip red was at 84, and on the green vertical line right here in the power chart, in the zip chart, zip red is at 67. It didn't have the power to push down because why? Because there's a lot of pressure within the market right now telling us that the price is going to be moving up. There's a lot of upward pressure in the market that we can't necessarily see. I mean, you're not going to see this from the standard indicators in TradeStation, and most of what other people build. I mean, the indicators are truly the heart of this system. Without the indicators, we don't have the patterns, the conditions, or the signals. I mean, it's powerful. And then it leads us to on the vertical green line here in the zip chart with zip pink lowest. Zip pink has spiked down considerably. I like to call it stuck its nose out under, and the typical reaction is that it reverses back up. In the swing chart, the nose down comment clearly is appropriate for Swing Zion. Swing Zion in this case, again, remember Swing Zion is your price barometer, and Swing Zion is at 3.08, and on the green vertical line day, the next day, Swing Zion is at minus 0.88. And so it drops just about 4 points, and that's a powerful move for the indicators. But it's not that powerful when you look at it on the candle charts, and you look at that and you go, is that going to do something or not? But here on the indicator lines, you can clearly see what it's going to do. Remember earlier when I commented about how I'm going to flip back to, oh no, that doesn't make any difference there. I'm going to note right now, look at zip yellow. Zip yellow right now on the vertical green line day is at 74, and it's bouncing back and forth for the next 8 or 9 days right up there under green. Zip yellow is 96 at the peak, and on that day we have Zip Zion has been at 100 for 2 days. And on this same day, on the last day of the peak, Zip Pink is at 98. It is the highest indicator, and has been, in this case here, it has been since for about 4 or 5 days. And so remember, to qualify to go down in 90, I'm going to say 90, maybe 92% of the time, in order for a pink-green top to reverse, Zip Pink must be next to the Zip Green line at 100. In the other cases, you're going to see when Zip drops, you're going to see when Zip Green drops off 100, you're going to see the Zip Pink much lower. I mean, it can be in the 70s or 60s or 80s, 70s, or 60s real easily. So, and that's a different type of movement that you see. But again, in 90% of the time, Zip Pink is right under Zip Green when it drops down. And it's also above 75 almost all the time in an uptrend. And so now if I move us back to these original lines that I had here and look at the yellow lines, you can see after the pink line, it went up considerably, crossed over 50. That's always a good signal. And whereas on the green vertical line, the Zip yellow has not started to go. It's still remaining low. Even, even out here on this, I'll move this out one more. Even on this green vertical line day, I think I commented about this. By the way, we have a Zip Pink highest on this indicator right here on the green line right next to the right side of the Zip chart. And that is indicative of the next day down pattern. And again, we have divergence between several lines going on here. I'll just point it out. You can see Zip Green is in a BOC lower pattern. Swing Zion is in a BOC higher pattern. And when you get a price line or price barometer in a BOC higher pattern, that's typically the peak, and next day it's going to go down, which it does. We can see the little red there. But again, now going back to the Zion line and its comparison, note that we have on this day right here, the Zion line, swing green is going to cross over the 0 line on the next day. And look at swing blue has been up over red. And remember, when you may not have heard me, but in past videos I've defined or stipulated that when swing blue is above and traveling above red, it has a stronger uptrend. When blue crosses over green, that can be a start of an uptrend too, but oftentimes it's weaker. But when blue crosses over red, then that's a stronger uptrend. Keep in mind, it's done that under 0, and often does. Don't let me make you think that that's an exception to the rule. But one thing that really is key here, I'll move the green line right over to there. That green line now defines the day that the swing gray line crossed over 0, and that's powerful information. Because now from some people's perspective, we have now entered an uptrend. And so there's a lot of uptrend signals before you even get here. Get to the big movement is what I'm trying to say. I mean, this green line is 10, 12 days before the big movement. It looks like it goes up to over $24. The high there was at $23.42 on the last day of the peak. Down here at the green vertical line, the price it closed at $15.27. So there's a $10 increase just by identifying the fact, excuse me, that the lines are crossing over 0. In this case here, the swing line crossed over 0. If I go back to the same day, that is April 19th. If I put this line here, I think it's here. No, that's April 13th. If I move this green line to the 19th, okay, now those two green lines are on the same day as that they're marking. And this is the day swing Zion crossed over 0, and it's also the day, if you'll see, that on the green vertical line here in the power chart, green is crossing over 0. Power green is at minus 0.0043. It is just a hair under 0, and it's going up. And you can see the separation in your blue, pink, and yellow lines. They're getting wider, and it's going up. Even though your price red and is coming down, it's starting to identify that situation. Now, one other thing that I want to mention, if I can here, and this is with a trio. This is trend, gray, green, and red. Oftentimes on the pink vertical line, when gray is divergent, in this case, trend gray is going up and green and red are going down. Now we obviously have the low angle down signal in trend red telling us that it's going to go up. But what you may not realize is that there's in the divergence between the gray and the red-green lines, gray is pointing in the direction of the trend. Likewise, same thing here. On the green vertical line day, trend gray was pointing toward the trend. So that is, there's a high level of that happening. I don't have a real good handle on it right now, but I do know the divergence. It's between gray and the other two. It's not between, it does happen, don't misunderstand me, but I haven't studied it like I have this. You can get green up and gray and red down. That will do something sometimes too. It just depends on the on the situation. But this is a real viable alternative. Let me point out something here to you also on the pink vertical line day. Just like in a down touch pattern where you have the 6 lines that are down touched. Obviously it's 5 that are down touched, but we have the sky touch. Okay? In the reciprocal, or not reciprocal, but in the inverse of that, when we look at up touches, we have 5 up touch patterns, and we have 1 that's just like the sky touch, which we call the spike touch, because it's going down. The pink vertical line is on the one day after the red crosses under the green, which makes it a one-day spike touch. And as you may or may not know, sky touches and spike touches can be gaps or can be conditions for gaps in when they are a sky touch or when they are a spike touch, when they are on the crossover day or 1, 2, or 3 days after the crossover day. So there's 4 days of possible gaps in the situation. It's just like right here. If you look at the pink vertical line, we are in a low angle up on trend red on that pink vertical line right now. But we are also the 3rd day after the crossover. Red crossing over green, and this is technically called a sky touch. Red is highest. Let me remind you that red does not have to be highest in a sky touch. It can be mixed in amongst the other indicator lines, or it can be highest but under 0. But on this day, what do you get? You get the biggest green candle occurring next day out of the last 5 days, and that has some gap aspects to it, but I don't think it gapped much. It closed on the pink vertical line at 21.02, and it opened the next day at 21.16, so it went up 14 cents. But that's nothing, you know. But in any case, you can see that the day after the pink vertical line, you had that nice green candle, and it became the pink because of all those bottle noses that were performed. And you also had some nice recognition in the Power Zion, which is in a high right leg W pattern. And remember, Zion can often run opposite of the Power 3 or Power 4. And in this case here, the Power 3 the Power 3, the pink, blue, and white are together next to Zion and the red in here. And they, on the pink vertical line day, pink and blue cross green, but they don't cross orange. And when pink and blue and white on cross over the orange line, which is the day after the pink vertical line, that's when we get that big green candle. So crossover days is just like over here. Here's the first day. This would be the first. No, here is blue and white, and I'm not sure if pink is under. It's pretty close, but blue and white have already crossed under. Red has crossed under. Zion is obviously under, but when those Power 3 and Power 4 lines cross under orange, they're not crossing under the 0, except for red crossed under 0. They're not necessarily crossing under 0, they're crossing under the Power Orange line. Then you're going into a downtrend, and you can have a nice movement that same day as the crossover. In this case here, you can see obviously after the pink vertical line day, the downtrend was a gap down, and then it went down. So again, some excellent, I wanted to point out that I had forgotten to do that earlier, but I wanted to point out that trend trio example for us. And I was looking back for something else, but it's not there. So those are some of the key elements to a trend that we that or to a bottle a cycle bottom that we can see differences in. I reverted a lot of information to cycle tops as well, but I just wanted to share with you some of the key information about how the indicators function, because when I happened to spot this green and pink vertical line positions where they were exactly the same, with the trend red in a low angle down and the power red going up. And that's how I started it, and I was able to find that one in the back to give us more understanding. So, excellent examples of how the indicators work. They are powerful. They are real. We do find gaps before the gap occurs using these indicators, and we identify strength. Remember, the indicator line lengths are one method for us to find strength. One of the other primary methods is the ability to identify divergence. It's like it's hidden strength within a move that you can't exactly see in the way of indicator line length. Because I've never done a comprehensive study between divergent lines. Like power pink is up and power blue is down, and do they have different line lengths? I just have been using the divergent activity to identify strength in the marketplace. And it's basically opposing strength, obviously, but it's very powerful. So you can find those longer lines. A BOC higher pattern is a right leg longer line, and you can have different patterns. Obviously, high M peaks the left peak can have like price red highest. The right peak can have price green highest. So it's a down up pattern, and it doesn't make any difference if the right peak is higher or lower than the left peak. The difference is that green was on top on the right peak and red was on top on the left peak. And we refer to that as pattern divergence. It's a high M pattern with the one line opposite the other line. And again, there's a lot of other issues between high M right peaks higher versus high M right peaks lower, and both of them are very effective in their ability to identify the start of a next day down or downtrend. So powerful information. I'm really hopeful that I was clear in my understanding, in my direction for your understanding, and in sharing this information, because it is literally amazing